Good evening, guys, and welcome to yet another wonderful session. And it's always nice to have you guys on these sessions. And today, what we're going to be talking about is going to be not something different entirely because we started talking about it last week, which was um more or less how to get our stop loss and then take profit levels in the market. And then we spoke about aggressive entries first of all. And we said that once we come around this week, what we'll look at will be more or less conservative entries. Do you understand? Now, why we're looking at this thing, like I already told you guys last week, why we're looking at all this is so that we avoid or we more or less overcome that trouble of entering trades and then not really knowing or not really having a defined approach on how to put our stop loss and then take profits. And we all know that could actually cost us a lot of money. So what we're going to be doing today, what we're going to be doing in this case is more or less trying to decipher these things. Look at the methodologies we have in actually getting these levels. Do you understand? So that's what we're going to be doing. For those that are going to be watching this on YouTube also, that's what I'm more or less looking to do. Do you understand? So we did aggressive entries last week, and we said that aggressive entries are more or less entries which were not looking for any extra confirmation before jumping on the trade. Now, when it comes to conservative entries, on the other hand, by the time price gets to our level of entry, that's by the time price gets to our zone or points of interest or area of interest, whatever you call it, as long as it's where you're looking to jump on your trade at, as long as well, once price gets to that level, instead of jumping on the trade immediately, what you more or less set out to do is look for an extra confirmation before you jump on the trade. So you're more or less telling price to show you a sign or give you a sign that it's actually going to reverse at that level or at that point you're looking at it to reverse. So this is what I mean. If we if we got something like this where price creates a series of shit, is my network not working? Price creates a series of oh shit, my network is bad. One sec, let me refresh this page. So for those of you just joining, what we're trying to discuss was more or less conservative entries. Now, I was saying that when it comes to conservative entries, once price gets to our area of interest or our zone or where we want to jump on our trade, we don't just jump on the trade. We have to first of all look for a confirmation that price is actually going to react at that level. Do you understand? So this is what I mean. Let's say we got an uptrend, price creates a higher high, higher low, then another higher high. And then we're waiting for price to come back down here and then buy. So, sorry, we're looking at something like this. We're looking at price coming down, tapping this level, and then reversing to the upside. Now, in this case, once price gets to this level, instead of buying immediately, like aggressive entries, what we do in this case is more or less look for a confirmation that price is going to react from this level.
They're not seeing your- I'm not seeing your screen.
One sec, I'm coming.
Sorry.
What's this saying? So as I was saying, once price taps into that level, we're actually looking for an entry confirmation, or we're looking for a confirmation that price is actually going to reverse. Is that confirmation that we look out for? They are called entry confirmations. Do you understand? So there are certain criteria that price must fulfill to show us that a reversal is going to happen at this place before I actually jump on the trade. So we need to see that price actually fulfill all those things before I actually jump on it. Now, what are these things? Now, these things are more or less entry confirmations. Now, entry confirmations can either be, one sec, entry confirmations. Now, entry confirmations can either be one, market structure confirmations, or candlestick confirmations. Now, these are the two types of confirmations you can look out for before jumping on any trade. So today, the one we're actually going to look at. Sorry, I said oh shit, because normally the way the way I number them or the order I put them most times is always candlestick before market structure. So as I was about saying today, we're going to look at candlestick confirmation. Then I saw that it was market structure confirmation that was at the top. But then we're actually going to look at candlestick confirmation because amongst the two of them is the simplest. So we'll look at candlestick confirmations today. We'll look at what it is. Do you understand? And then how to basically use it to trade. You get now. I'm going to give you guys more or less like a heads up. This whole thing is going to require us actually dabbling with time frames. So if you really don't understand how to use time frames, no worries. Do you understand? Just more or less listen to what I'm saying. Do you get take it for what it is? Don't try to interpret it in a different way. So let's get into it. Let me clear this. Now, when it comes to candlestick confirmations, let me write that there. Candlestick confirmations. When it comes to candlestick confirmations, yeah, once price gets to our level of entry, or once price gets to our zone, or once price gets to where we want to take our trade from, well, but is it a must that we have to use both? No, it's not a must for you to use both. You guys can just pick anyone and then decide to use it. So once price gets to our level of entry or where we're looking to take our trade from, before we jump on the trade, we need to see a reversal candlestick. You get the keyword there is that once price gets to your zone, you drop to your entry time frame. So let me write that down. Once price gets to your zone. Now, when I say zone, or whenever I hear me say zone, it's more or less your area of interest, point of interest, anything that relates to wherever you're looking to jump on your trade at, or wherever you're looking at price coming back to reverse. So once price gets there, you drop to your entry time frame. Entry time frame to look for a reversal candlestick. So that's basically it. Now, the key thing there is that you have to wait for price, first of all, to tap your zone. Once it taps your zone, you drop to your entry time frame to actually look for a reversal candlestick. Now, one thing I want to clarify is entry time frames vary from trader to trader. So it depends on the kind of trader you are. Personally, I'm a day trader. So the example I'm going to be giving you guys is more or less from a day trader's perspective. Do you understand? Now, reversal candlesticks. Reversal candlesticks are a lot. If we go to where's my browser? If we go to my browser here and then Google reversal candlestick formations or reversal candlestick patterns, reversal candlestick formations. So you see that, let me go to images. You see that we have a lot of them. We have doji, inverted hammer, shooting star, evening star, all these ones. Do you understand? There are a lot of reversal candlestick formations. Now, you cannot chase all of them, or you cannot say you want to use all of them. So we're going to pick one, and then someone says they can't see my screen. Is it so for everybody, or is just for one person?
For us, we can see your screen.
Okay, one second. I want to do something. I think I know where the problem is coming from. One second. You guys can see my screen, yeah? I leave my phone no good. Okay, so as I was saying, once price gets your time to your zone, you drop to your entry time frame to look for a reversal candlestick. Now, the reversal candlestick we're going to be talking about here, or the formation we're going to be talking about, is the pin bar formation. So the candlestick we look at is the pin bar candlestick. Now, when it comes to the pin bar formation, we got two types of candlestick. We got the bullish pin bar and then the bearish pin bar. So the bullish pin bar is more or less the candlestick that people call a hammer candlestick, a candlestick that looks like this. Yeah, that's a bullish pin bar. Then a bearish pin bar is more or less the opposite. It looks like this. This one, most times people tend to call it upside down hammer candlestick. Now, this one is more or less a red candlestick. One sec, sorry. This one has to be a red. And then this one has to be like a green candlestick. That's a bullish candlestick. So now, this bullish pin bar is basically the one we look out for when we're looking for a buy. And then this one is more or less what we look out for when we're looking out for a sell. Now, I was saying I'm going to give you guys the example from a perspective of a day trader. So now, personally, what or how I use this is more or less, let's say I got an uptrend. And then I got my zone where I'm looking at buying from. And then price eventually gets to that zone. Now, once price taps to this zone, now I'm dropping to my entry time frame. Now, the entry time frame where I look for this candlestick confirmation is the 15 minutes time frame. So once price taps here on the 1 hour time frame, I'm going to drop to the 15 minutes time frame to look for this hammer candlestick since it's a buy I'm looking out for. Now, once I see this whole hammer candlestick formation, I'll be looking at something like that, something like this. Now, once I see this candlestick, what I'm going to do is jump on my trade at the close of the candlestick. That's enter my trade around the close of the candlestick. Stop loss below, a few pips below the candlestick, and then we target the 1 hour high. Now, I want to clarify something. We have to wait for that candlestick to finish forming. If you see that the candlestick is still moving, it has not finished forming yet, don't jump on it. It might look like a pin bar, but then maybe before it closes, it might change to another candlestick. So you have to wait for what? The candlestick to finish forming. So this one is more or less for a buy scenario. Now, if we're looking at a sell scenario, it's more or less the opposite. Let's say we got a downtrend, and then we have our zone where we're looking to sell from, maybe somewhere around here. And then price eventually gets to that level. Price taps into that level. Now, before we jump on the sell, we have to look for this upside down hammer candlestick. That's the bearish pin bar candlestick. So we need to see something like this. Price create something like this. That would be a red candle. Yeah, something like this. Now, once the candlestick finish forming, yeah, at the close of the candlestick, we enter at the close of the candlestick. Stop loss a few pips above the candlestick, and then we target the 1 hour low, which is going to be somewhere around here. Are you guys getting the idea? So it's more or less an easy something. We're looking at this candlestick, this green one for a buy. This one we're looking at it for a buy for a buy trade, and then this one is more or less for a sell trade. That's basically what we look out for. So whenever I have a buy trade, that's the one you look out for. Whenever I have a sell trade, that's the one you look out for. So now let's jump on our chart and then take a couple of examples. So if we look at this example, for a while, price was actually in a downtrend. The market was more or less creating a series of lower low, lower high, lower low, lower high. And then it pushed down to create a lower low, and then it started pushing back up to create a lower high. So in this case, we're more or less looking at where price could potentially sell. And if we use something like our Fibonacci retracement tool, something like this, you see that this candlestick just tapped into the 0.618 level, which is more or less where we're supposed to be looking out for a sell. Do you understand? In this case, that's for price to stop there and then reverse to the downside. Now, immediately price taps into this level. What we're going to do is more or less drop to our 15 minutes time frame. Now, what are we looking for on this 15 minutes time frame? We're more or less looking for a bearish pin bar. Since it's a sell now, we're looking for that whole upside down hammer candlestick. Yeah? So where's the chart? It's loading. Okay, good. Okay, good. So this is it. So this is the level more or less highlighted on the 1 hour time frame. So we're looking for that whole pin bar formation before we jump on the sell. So let's see. Now, here's something interesting. Immediately, price tapped into this level. We got this whole small pin bar candlestick here. Now, entry would be at the close of the candlestick, somewhere around here. Stop loss slightly a few pips above the candlestick. And then we target the 1 hour low, which is down here. So price started selling. Let's see. Okay, price actually went back up to take us out. Now, what's something interesting? Immediately price took us out. See the next candlestick that was formed. Another bearish pin bar. Now, personally, yeah, I'm not going to advise for I'm not going to advise or you to take re-entries. Do you understand? I've never been someone that has been comfortable with re-entries. But then lately, most of the trades I've been seeing, especially with candlestick confirmations, price will more or less try to fake you with the first candlestick. Once you jump on it, it takes you out and then forms another one. Do you understand? So you can more or less research it on your own personally. Do you understand? It should be something that you should do personally and then look at it and then see. If your trades, let's say price takes you out on the first candlestick and then creates another one and you jump on it, if it works, then fine. You can actually do re-entries using candlestick confirmation. But then mind you, you have to see that bearish pin bar. For a sell now, you have to see that bearish pin bar first before you decide to sell. Now, after seeing this candlestick, our entry is going to be at the close of the candlestick there, stop loss a few pips above the candlestick, and then we target the 1 hour low, which is down here, something like this. Now, let's see how price behaved. From here, price just started dropping to the downside. We came back, we tapped that level, continued down, and then we got to like the take profit level. Are you guys getting the idea? So can you talk about, yeah, I like I said, we'll talk about supply and demand, liquidity, all those things, I think in our next class. So it's more or less something like this. For a sell, you're looking for this upside down hammer candlestick, and then for a buy, you're looking for the whole bullish one, that's the hammer candlestick as a confirmation. So let's look for where we actually got like a hammer candlestick for a buy. Yeah. Let me see. Where have I? Okay, USD card. I think we got a buy last week with candlestick confirmations on USD card. But then, all in all, last week was actually good. So, here was that buy level. There was this place here that we got like a very nice buy. Good. Somewhere here. So now, if we take a look at this market, we'll see that price was actually in an uptrend in this case. So the market was more or less creating a series of like this high, higher low, higher high here, higher low, and then another higher high, and then price started retracing. Now, if we're looking for where we can potentially enter a buy or jump on a buy at, it's more or less this whole resistance level that price broke. Do you understand? That level has a potential to turn to a support. Do you get? So what we do in this case is more or less wait for price to tap into that level. Now, the moment price taps into that level, price has not tapped yet. Now, this candlestick now tapped into that level. We drop to the 15 minutes time frame to look for that whole bullish pin bar candlestick. That's the hammer candlestick. So let's see if we actually got it. Okay, something interesting happened here. So if you look at this here, immediately price got into this level, we got the hammer candlestick. Now our entry is going to be at the close of the candlestick up here, stop loss a few pips below the candlestick, and then we target the 1 hour high, which is up here, something like this for a true risk to reward. So let me play it and then we'll see how it goes. So this was like a trade we got on USD card last week. Good. Do you guys get the idea? So it's more or less something like this. Whenever you have a buy opportunity or a level where you're looking to buy, once price taps inside, you go to your 15 minutes time frame to look for a hammer candlestick. It's very, very simple. It's a very, very simple candlestick formation. If you're looking for a sell, once price taps your zone, before you jump on the trade, you drop to the 15 minutes to look for a bearish pin bar. That's an upside down hammer candlestick. Do you understand? So that's basically it about candlestick confirmations. Do you get? So one thing I would like to say before we continue is that this is not the only candlestick confirmation you can look out for. But then if we start chasing all the candlestick or all the reversal candlestick formations, we're not going to, like, how will I put it? Well, it's not really going to help ourselves. So if you're not comfortable with this pin bar formation, you can go back and then research what other reversal candlestick formations are out there, and then backtest them and see if they work. Then fine, you can keep them. Do you understand? That would be my advice. You should not take my word for the absolute, or you should not take my word for, how will I put it, the beginning and the end. Do you understand? So it's just it. But then if you're looking for like a nice formation that I can always look out for, the pin bar formation is actually great. Do you understand? So that's being said, time for questions. If you have any questions relating to what we've just spoken about, you can ask it. We just have like 7 minutes to go. So someone asked, what if it didn't create a confirmation candlestick and start to go back up? Yeah, you don't have a trade. There's a reason why that's your confirmation. Do you understand? It's more or less like they tell you to go and buy something at the supermarket, and then they say buy this particular brand, and then you don't see it. You come back. Do you understand? You not pick another one because it was specific. Do you get? So it's the same thing with this one. It's specific. This is the formation I look out for before I jump on my trade. So if I don't see it, I don't have a trade opportunity. Do you understand? That sort of stuff. Any other question before we call it an evening? Jerry is not on the session this evening. No wonder we got no questions. Okay. How do you know whether to use Fibonacci or flip zone for entry confirmation? Okay, so I don't use it for entry confirmation. I just more or less use it for where I'm looking to jump on my trade at. Do you understand? That's more or less like your entry level. Do you get? So how will I put this? For beginners, what I would advise is more or less investigate, backtest, and then see which one makes you more money. Do you understand? Or which one is simpler for you to understand? Do you get? So that's how you know which one to use. And then once you pick one, just stick to it. Now, there are certain things that once you get better or once you get more experience, you can do and then get away with. Now, I'm not saying it's healthy for, how will I put it, especially for beginners. To a certain level, we have to be disciplined. Do you understand? So for now, just investigate, find which one is simpler for you, and then learn it and then master it. Do you get? For someone like me, I've personally, I teach all these things and then I speak about them month in, month out. So I know them very well, and then I've seen them work a lot. So I have trust in all of them. I've more or less back tested all of them. And then how will I put it? I don't have any problem using any of them. Most times, what makes me pick them is more or less I don't want to say how I'm feeling in that moment, but most times that's how it is. But I more or less look at it and then I'm like, okay, in this case, I would rather use a Fibonacci retracement or maybe the flip zone. But then those are like the two I always use. So someone asked, this is dicey. Network was bad. Kindly share the link for refresher. I don't understand link for refresher. Anyways, I would actually post this video later so you can watch it if the network was bad for you. Can you explain liquidity? Now, right, the only YB. That is my boss now. So I told you guys that our next free session is going to be next week Sunday, and that one is quite special, and I'm actually anticipating it because we're actually going to talk about certain concepts, things like liquidity, order block breakers, fair value gaps, all these concepts that we hear people throw around in the market here and there. Do you understand? I explain it for what they are. Do you understand? And what you can potentially use them for in the market. Do you understand? So we more or less know what they are, and then they don't look so, how will I put it, confusing in our head. Do you understand? So I'll explain all of it, and then you look at them, and then you see if it's something that relates to your trading, fine, you use it. If it's something that doesn't relate, you just know it, and then you know that it doesn't affect your trading, and then you drop it. Do you understand? So that's basically what we're going to do next week. Any other question? So I don't understand it, but I'll use the link to relearn again. Okay, so I'll be posting the video and then sending the link later on the community, yeah, on the free community, and then the Discord also. But then I'll drop it on Telegram first. So if you're not on the Telegram group, I'm going to share the link to the Telegram group so you don't miss the video. Join so you don't miss the video. One sec. Let me get the link. Someone is saying, can you analyze NZD USD quickly, please? Do we have time? We have 3 minutes. Let me see. This is crazy. So let's look at the 4-hour time frame. Okay, so we more or less shifted to a downtrend to a certain level, yeah? Because my drawing tools. So to a certain level, we more or less broke above and created this high here, higher low. Price failed to create like another higher high here, and then we sort of like created this low. Now, this low broke below the previous one. So in this case, we more or less shifted structure to a downtrend. Here's the thing. We got this whole large impulsive move on the 4-hour time frame. So naturally, I'm anticipating that price will start retracing anytime soon. But then there's this whole rule of always follow the trend until it takes you out. So let's go down to the lower time frame and then see how we can follow it. Now, on this 1-hour time frame, we can clearly see that we got a downtrend, and this was the downtrend that we like got a couple of sales last week from. So we got like lower low, lower high, equal low, lower high, lower low, lower high, lower low, lower high. Then we got like this whole low with like a flat retracement. The retracement was not really deep. And then price created another lower low and then nice retracing. Honestly, this market condition is very, very tricky. I wouldn't say, oh, jump on sales right now. But then if I'm following the rules, this could be like a potential sell. So price is retracing and then price is tapping this level here. And then we should look at price tapping into this level and then reverse. Do you understand? Now, if price taps into this level and then it doesn't reverse, fine. It's more or less starting to retrace. Now, if it breaks above and starts retracing on the 4-hour time frame, we can start look to take the, how I put it, the short-term buys before the next drop to the downside. So for now, look to sell. Do you understand? As price is tapping into this level, look for a sell confirmation. If you see it, then jump on the sell. If you don't see it, sit out. Do you understand? And if you jump on the sell and price takes you out, it's fine, because honestly, the way prices are sold now, at any point in time, we're supposed to start seeing retracements back to the upside. So someone said, when are we getting into market structure? So we have done market structure. I think we did market structure last year. I don't think we've done it this year. We did market structure last year. If you want the video, just send a message on the group and then I'll drop the link on the group so you can watch it, or you can DM me personally and then I send you the video. Any other question before we go? Okay, we actually have to go. So that being said, it's wonderful, or it has always been wonderful having you guys. Have a very wonderful evening, and I'll catch you guys same time next week. For those that are just joining, you can watch the video on YouTube. I'll send the link out later. Bye, guys. Take care, guys.